Hi everyone, it's Tom Gentile. Welcome to Tom's Trading Room. It's Friday, September 11th, 2015, and what another crazy week we had in store this week. You're looking at the S&P chart. I'm going to get into that in a moment. I'm actually going to get into about 3 or 4 things in this short video. You can find all the details as well as our case study of the week logging into tomsoptiontools.com. And let's get started. So S&P had, again, you look at the last 5 days. We went from a drop on Monday to a rebound on Tuesday, outside day Wednesday, Thursday, and today Friday. We're kind of rebounds to the big outside reversal move we had. But really, what you need to be paying attention to is that over the last month we've created a triangle here. I believe this triangle is going to bust, and I believe it's going to bust starting Wednesday, shortly after the Fed meeting. In fact, this Fed meeting is probably the most important Fed meeting that we are going to have inside of about 9 years, which was the last time we actually raised rates. The implied volatility suggests that this is going to be a big move, and it would not surprise me in the least if we bust above and trade to the apexes of these triangles, above or at the high, or above or below or at the lows. In any event, we've got a really nice synthetic straddle as a case study for this week. Again, tomsoptiontools.com. You can get that by logging in and clicking on this week's PDF. Another thing I want to mention to you too is, and we talked SPY, TLT, USO, and FXE as part of our 4 corners when we're evaluating the overall markets. But I want you to pay attention to FXC. This is one of the 3 currencies that are really getting hit hard. This is the Canadian dollar currency. As you can see, it again is trying to retest these lows down here around 74.5. That's 74.5 cents American to equal $1 Canadian. And so this chart really doesn't tell the story. What you need to do is look at a longer term chart. Here's a 200-day chart. All right, last 200 days, roughly a little less than a year. And you can see that, in fact, if I actually change it to 250, that's going to show us roughly a year. Take a look at 250 days ago as we were trading at upwards of 91 cents to the U.S. dollar, and now we're all the way down in the low 70s now. Why is this? Because commodity prices are dropping, because China and the industrial revolution that's going on over there is starting to slow, and that's going to take hits on currencies like the Canadian dollar, the Australian dollar, the New Zealand dollar, and many more, but those are the 3 big ones that are being affected. And as you can see, as this dollar is dropping, the volatility is actually going higher. All right. Again, take a look at all the 4 that we discuss every week in this week's PDF. Next thing I want to talk about is the money calendar, just real quickly. You can see we're going out of green next week, and we're starting to get into the fall colors that are preceding this fall. And so you can see here we've gotten yellow, some oranges, we're getting some reds. This is really telling us that the patterns going forward on the most popular stocks, the most popular traded stocks, these patterns are now starting, at least for the next couple of weeks, to turn bearish. That means that there's bearish patterns out there that have 90% or better accuracy of actually stocks falling over the last 10 years during these time frames. Right? These time frames can go anywhere from 1 day to 30 days out, but we're seeing clusters of them starting to appear, starting tomorrow, and really turning bearish into next. I'm sorry, not tomorrow, next Tuesday. Really starting to turn bearish into next Thursday, Friday, the following Monday, Tuesday, and all the way until we get into October 1st before we start to see green again. All right, so keep that in mind. Finally, this is interesting too because it doesn't confirm what the money calendar is saying, but there is an interesting kind of quasi correlation going on here. All right, so we're starting to see darknet signals appear again, and if you look at the darknet list, it's actually quite a bit more than what you're seeing here. What I did was I looked at the pennies and weeklies list to see those penny pilot stocks that have weekly options, what's popping right now in terms of darknet active buy signals. Take a look at this. Okay, Coca-Cola's on here. Great, we had a money calendar in Coca-Cola just about a week or 2 ago. Priceline's on here. Got a money calendar buy on Priceline starting tomorrow. This looks good too. Nucor, though, Newmont Mining, Barrick Gold, and when you get even more into that, you'll see over here we've got another gold, AUY, and if you open the list up into the darknet list, you see even more gold stocks. So what this is telling me is that gold and steel type companies are clustering together and finding these channels that are colliding right now and telling us that there are active buy signals. These are not rebuys. These are not abandons or add-ons. These are fresh buy signals in the metals areas. So what does that mean? Well, that means that possibly the metals are likely to go higher because the stock market might go tremendously lower, or is it a risk-on play where the metals are telling us that the stock market might go higher? Obviously, we're going to find that out in a few short days. But I want you to pander on that one, and when you're searching around in Tom's Tools, bring up Darknet, take a look at some of these things, and see what you can come up with as you're looking for those low-risk, high-opportunity trades. All right, guys, thanks a lot. Have a great weekend. Have a great following week. And I'll see a lot of you when we start Mike Wade's Breakout Mastery Program, which will be this Tuesday, the 15th, at 8 p.m. Eastern Standard Time. All right? We'll be talking to you soon. Thanks, guys.